In today's analysis video, we are going to talk about how we are going to trade today's Fed rate interest decision. Many so-called forex analysts and gurus say that you shouldn't trade during the news. And many newbies believe that. They think news trading is risky. But you know what 25 noobsters say? It says three things. Plan the exit before the entry. Stay out when in doubt and use the news. So today I'm going to talk about how 25 Noobsters is planning to use this news. Number one, we are going to talk about some points which we have taken from one BlackRock article. So if you already know, BlackRock is one of the biggest investment company. You also probably know that BlackRock has a wing into research. So according to BlackRock expectations about the Fed, these are the points. Number one, pricing of interest rate cut expectation is overdone. So BlackRock is saying that it's overdone. That it means the market has sold US dollar more than it should have done. Last CPI ruled out 50 basis point. Second last CPI was weaker than expected, and many analysts were expecting 50 basis point rate cut, which has been ruled out, and we cannot expect more than 25 basis cut this time. Next, supply constraint will keep inflation high. You want to understand what is supply constraint? Go on Google and search supply constraint of 5 mega factors mentioned by BlackRock. You will understand because this may lend in this video. So coming to next, Fed will not cut as much as market is expecting. Market is expecting more and more cuts, more frequent cuts, and for example, last time expectation increased from 25 basis point to 50 basis point, which was quashed when last CPI was released, which was not poorer than expectation. Anyway, so this is the point. Cooling inflation is likely temporary. They believe that this cooling in inflation is temporary, and it's not going down to 2% anytime soon. Next, wage growth has slowed down, but not enough to suggest inflation moving to 2% target. Yes, if you look at recent labor market condition, for example, hourly earning is how we can understand wage growth. So it has slowed down slightly. However, it's not good enough to move towards 2% inflation target. And another very big point, European Union has more room for further interest cut, unlike US, because of the weaker economic activity, which is what BlackRock clearly pointed out in the article. It said, unlike US, European Union has more room to cut interest rate, and BlackRock sees European Union inflation moving towards 2% before it sees the same moving to 2% in the US. Indirectly, sell your USD. This is what BlackRock is saying. Why we believe in BlackRock? No, it's not about BlackRock. We believe in top-notch research firms. It's not just BlackRock. It can be Nikkei, it can be Reuters, it can be Bloomberg, it can be many more. But yes, we look at their articles and then we try to see whether there is a consent between what they are saying and what we have analyzed. So yes, we do have analyzed that CPI had gone down last time from Germany, and there were many other data which we have discussed about in our previous couple of videos or analysis which we have posted on our website, and you can see that even we had found out weaker economic activities from the euro area. So where you can find this is like you go to 25noobsters.com, then go to education, and under education go to trading ideas. All right, there you'll find the previous videos. Now let's directly come to USD JPY and Euro USD to plan our trade. So if you think this opportunity is very big opportunity, a potential opportunity, because this is going to be a combination of technical as well as fundamental analysis, you can take up to 10% risk. Our analysts generally take 3% risk in one opportunity. However, they take up to max 10% risk when there is a solid opportunities supported by technical as well as fundamental analysis, something similar to this one. And we are not just going to focus on Euro USD but also on USD JPY because of our own series of analysis. For example, last time we discussed a butterfly in USD JPY and we anticipated USD JPY to bounce back after completion of butterfly, which is this one. USD JPY has already started moving up after completion of this butterfly, which is already a bullish sign of USD against Japanese yen, which gives us more confidence to buy dollar against Japanese yen versus buying dollar against anybody, any currency, any other currency. So this is the one thing. On the 4-hour time frame, what do you see? This was the magnitude of the upward movement, then bigger magnitude of upward movement, then even bigger magnitude of upward movement, which suggests that USD JPY is more likely to be more bullish than the bears of Euro USD. So what we're planning to take half risk in USD JPY. What else we see here is histogram started forming above 0.0. So how we're going to trade? We are going to trade in two different ways. One plan is to trade in split positions, multiple positions. And how we plan the sequence of multiple positions? Not randomly. We do according to a formula. Where you can see the formula? 25noobstress.com, education, strategy details. There is a video, a formula of trading multiple positions in a sequence of same lot sizes. So yes, we will use same lot sizes in a sequence and we will pre-plan because we are expecting market to move between 100 to 150 pips, and accordingly we will plan using that formula which is given there. So let's say you open a buy position here and then there is a spike to the downside. We are buying, only buying, we are not selling. So another buy here, another buy here, and then we exit all of them above the average point. Let's say this is the average point and we exited them, all of them here. And then again market gave us slightly lower spike and then again we entered. So we will keep one position probably in the last couple of minutes of the press conference. There is no certain rule when exactly we will stop this multi-position trading, and when we will decide to keep one position for the final target is not something I can describe right now. This is going to be dynamic according to what we see in the ongoing press conference, because we are going to watch the ongoing press conference and we are going to make the decision accordingly. But there are two ways we're going to do this. One is multi-position trading and another one is to hold one position for the final target 142.79. Now I'm going to disclose how we have figured out 142.80 to be our final target for this trade. Let's go to 1 hour time frame to understand this. Alright, so this is the 1 hour time frame and there is a 3-drive pattern under development which will be completed at this level. If you do not know what 3-drive is, go to Google and search for 3-drive pattern. The minimum completion point is 127.2% extension of this fall to the downside. I'm talking about this fall, yeah, this one. So this is 147.79. That's all about USD JPY. Now we're going to move to Euro USD to plan what we're going to do on Euro USD. So this is daily time frame of Euro USD and we have a similar development here. There is a 3-drive under development and the target of 3-drive will be, completion point of 3-drive is going to be 962. Previous swing high is at 950. So this is the support area and market may reach here within a day or two. Why I'm saying a day or two? Look at these two things. Within 2 days we had seen 234 pips upward move. 234 pips means 2,340 points, and it happened because of the NFP. Right now there is no NFP after 2 or 3 days. Last time what happened, 2 days before the NFP there was FOMC press conference, which was totally a no news because there was nothing new or surprising said in the press conference and market was waiting for the non-farm payroll, which is why the main move occurred in the market on the day of non-farm payroll. That was August 2nd. This time there's no such news after a day or two, which is why you can see the move to this area within a day or two. So this is for the final target. And just like USD JPY, even in the Euro USD, we are going to trade this in two different ways. One, multi-position trading, where we can, let's say, we can see the spike here, here. We can sell around maybe 190. If we get the price here, sorry, let me zoom it. So if we see market going to like 1190, 1170, 1160, we are going to sell at all these levels and take all. And when market will spike to the downside, we will close all of them. And we will close all of them around this. This support, which is also 50% of entire move to the upside. I'm talking about this swing. All right, so 1075 approximately. So this will be the target of our multi positions, and one final position is something we will keep for the final target. And how we are going to decide which one position is going to be our one leftover final position, again, this is going to be dynamic according to what we observe in the press conference. But the target for that final position will be 962, 950 area, 109,620. So that's all. And like I said already, planning of multiple position has to be done according to the formula. If you are planning randomly or trading multiple positions and market will keep going up, you will lose all your damn money. Do not do this. Do not do randomly. Plan your position according to the formula, and then even if market will close as bullish candle today, unlike we are expecting, and if we have to take losses from all the positions, maybe all three positions, we will have a limited loss according to our pre-planned risk. So if the whole day will close as a bullish candle, we will exit all the position loss. That is why whether you are trading one position or multiple position, plan it before you do it. Like we always say, plan your exit before the entry. So use the formula and enjoy. Thank you for watching.